I cannot believe it is already this time of the year again where we're talking about the 2024 property market predictions. We're just looking back at the video that Ben and I recorded last year, breaking down some of the predictions from all the analysts, and me and Crystal are super excited to jump into it today and start to break down some of the expectations for the Australian property market, which look pretty damn good based on the research we did this morning.
Yeah, I'm really excited to get cracking. Some of the data is super exciting. I think it's looking a little bit less doom and gloom than it did at the start of 2023, depending on who you followed. There's a few people we followed that still had some pretty good predictions for 2023, and you know what, a lot of that ended up unfolding.
Yeah.
But 2024 is looking pretty exciting, and I literally just can't even believe it's December.
Seriously.
It's insane that we're even at this time of the year, and this last 11 months has just absolutely flown by.
Flown by, it's crazy. And like this year turned out much better than every single analyst was predicting. So, you know, I think last year most people were predicting a recession for 2023 in Australia, in the United States and in the United Kingdom. That didn't happen. So every single economist had predicted that, which was over 60% of economists around the world, in Australia, in America, in the UK. These are the markets that we predominantly talk about. They got it wrong. So I think it's just good to take everything with a grain of salt because, you know, we did avoid a recession this year despite those interest rate rises. So we obviously saw the cash rate peak in 2023 at 4.35%, sharpest rate rising cycle in history. But it's just created another statistic. Over the last 70 years, Phil Anderson broke down all of these interest rate rising cycles. And what he noticed was that out of the last 11 interest rate rising cycles over the last 70 years, 10 of those 11 rate rising cycles, property prices actually rose. And that's what's happened this time around as well. So, you know, looking back over the year of 2023, we've seen Sydney house prices experience some double-digit growth. Brisbane property prices experienced double-digit growth. Perth property prices experienced double-digit growth. Adelaide was up over 5%. Melbourne almost hit the 5% range. The two most underperforming markets, or three most underperforming markets in Australia, was obviously Hobart, Canberra and Darwin, with everywhere else looking really good. Now, obviously this was due to the low supply, the low construction activity and the massive amounts of population growth. So 2023, in my opinion, was a boom year. You know, nationally, property prices up over 6%, closer to 7%. But obviously, you know, three big capital cities, Sydney, Brisbane and Perth, all experiencing double-digit growth, in my opinion, is an absolute boom year. So, you know, to everybody who had the confidence to get in early in 2023, well done. You've obviously made some epic decisions. Yeah,
it's really interesting to see how the media portrayal of what the market was doing or going to do versus the reality of what occurred or what might occur actually unfolded. And some of the things that we spoke about in the video, or you and Ben spoke about in the video at the 2023
Property market predictions.
I'm looking and going recap. I'm like, no, the 2023 predictions, just recapping what actually happened. Like there were some mixed reviews where people were saying that the market could dip at least 20% from the highs in 2021 through to the end of 2023. Obviously that didn't happen. Some were saying that there could be an incline, but they weren't sure as much, and no one really wanted to be super bullish with those predictions. Obviously you mentioned, but they did say that some economists said that we would enter a technical recession. Again, that didn't happen. According to Phil, they were pretty confident that at the start of 2023, they were starting to get inflation under control. He didn't see as many rate rises occurring in 2023 that ended up happening. He was expecting that maybe rates might start dropping by the end of 2023 or start of 2024, which obviously they did continue to rise and have hopefully now hit the top. Inflation is hopefully has peaked and then starting to come down around that 4.5% to 5% range, which we'll touch on what SQM said, but that's pretty well in line with one of the scenarios that they came up with. Just touching back on what Phil said, he was expecting that the easing of credit might have started in 2023. Again, that hasn't happened, obviously, with the rates still rising. Credit's still really, really difficult, and in fact, most people's borrowing capacity is down 30% on what it was a year or two ago. So fingers crossed that easing begins to happen in 2024. And then SQM also said that unemployment was at record lows at the start of 2023.
Yep.
And we're still in a pretty good place for unemployment numbers as well right now.
Yeah, thank you for the recap. And like, when we looked back at the video from last year, the person who was the most accurate out of all of the predictors, the economists, the analysts, was Lewis Christopher from SQM Research. So his scenario 1 came to fruition where he said, he actually said that the cash rate won't go over 4%, which it did. But he said inflation eases, and that's exactly what happened this year around. And obviously, massive amounts of immigration. So, record levels of immigration since the 70s, basically.
Yeah.
So he was the most accurate. I think he said that the national average was going to go up around 5%. He said that, Brisbane, Sydney, Perth were going to be the top performers. That came to fruition as well. So Lewis Christopher, I don't know if he's got a crystal ball or not, but apparently...
Seems like he does.
For the last few years, he's been the most accurate property market predictor that we've come across, and we'll definitely dive into some of that stuff later in today's video as well. But just want to start by talking about some 2024 predictions. So starting with the great Phil Anderson himself, I need to start talking about Akhil Patel as well, because it appears as though Akhil is starting to take over more of the ownership and especially more of the community outreach or media for property share market economics. So their expectation is the cycle is unfolding exactly the way that they expected. They did expect credit to ease this year, but that obviously didn't happen due to inflation. So they've pushed that can down the road to next year. So they do believe that credit will become a little bit easier with a drop in the interest rates. They do expect the property market to continue to increase in Australia, in America, and also the United Kingdom. They really do believe that we're going to see a huge property boom beginning from sort of the middle of next year, middle of 2024, through until the beginning of 2026. They think it's going to be bigger than the 2021 property market boom, which makes me a little bit excited but nervous at the same time, because that was a wild year.
It's crazy.
And they are sort of predicting that the US market will peak, the US land market will peak in sort of 2026. Not too sure when in 2026 at this point in time. So, that's really bullish. There's still plenty of time to go. There's still plenty of growth expected from these guys. And it'll be interesting to see how everything unfolds.
Yeah, we're so unbelievably grateful that we've stumbled across Phil Anderson. Honestly, he's been so accurate in his predictions so far, and fingers crossed that does continue. I just love his stuff, and the way that him and Akhil are really analysing things at the moment is super exciting. And just bringing it back to like a more localised level, obviously they look into the global market, in particular the US, and how the share market, the property market there may then unfold into places like the UK and Australia. But just boots on the ground here and what we're seeing in the markets that we buy, and Australia-wide, vacancy rates are at historic lows right now, sitting around 1% nationally. Rents have continued to rise since that 2021 boom and have not gone backwards in, I think it's about 36 months straight, which is absolutely crazy. And they are continue to go are predicted to continue to rise over the foreseeable future. We're not sure how long that's going to last, but with vacancy rates as low as they are, the supply as low as it is, rents are going to continue to go up because there's just so much competition. And while interest rates have risen, the need for rents to go up for investors to afford to hold those properties, it all kind of plays hand in hand with one another.
Yeah, it'd be so hard if you're a tenant at the moment, experiencing those rent rises. It obviously makes it hard for those people with inflation in every other part of the economy as well. But I guess it gives some reprieve to property owners because, rental yields have been increasing as well. So, it does help with those higher interest rates at the moment.
Yeah, definitely.
But I'm pretty keen to dive into it.
Yeah, let's go straight into the data.
I think I've got some stuff from, about like 10 different economists, analysts. So basically, like the average economist is expecting property prices to rise by 7% in 2024.
Yep.
That's another really strong growth year. Like, there's no doubt about it. So if we look at the chief economist, Carlos Cacho, expects a 6.5% rise in house prices nationally through 23-24 financial year. If we look at the forecast for the financial year in 2024, so, really only got about another 6 months of this, but then we'll dive into the actual year of 2024. So Lewis Christopher from SQM expects property prices to rise between 6 to 8%. Baron Joey expects it to go up about 6.6 to 7% nationally over the next 6 to 12 months. Shane Oliver from AMP, 7%. Oxford Economics was probably the least bullish. Marie Kilroy only expects property prices to go up 1.5% next year. Then the guy from Jarden, 6.5%. The Australian National University, just a 2% rise. Cameron Kusher from PropTrack expects properties to go up by 4%, CBRE by 5%, and Frank Knight by 4%. So very different to last year.
Yeah.
Across the board, it's going up, where last year it was
mixed.
Very mixed, and most were actually predicting property prices to drop. So that makes me pretty damn excited. So I guess the major thing is higher interest rates will continue and unemployment will continue to rise. That's exactly what the RBA wants. That's why they've been rising interest rates for such a long period of time, is to hedge against inflation and to increase that unemployment rate, because then household spending will go down. What most of these economists believe is that a lot of the household savings will start to deplete through next year. And they believe by sort of July next year, 4 out of 5 Australian households will essentially not have a savings buffer, which is pretty sad to think, but that's when most of these guys are predicting those those interest rates to start to decline. And I guess if we look at those numbers, that's over the first 6 months of next year, and then they expect house values to go up by 10% from midway next year as buyer demand drives prices up. And nationally, they expect prices to go up by 4.9% over the next 9 months. And then from June 2024 onwards, prices are set to rise by 9.4%. So that's from KPMG, one of the big 4 consulting firms in Australia. They have a lot of data, a lot of information. So they forecast national house prices are set to explode from mid-2024 until mid-2025. So the 24-25 financial year, according to KPMG, according to most of the big banks, according to most of the analysts, according to property share market economics, are set to boom. Yep. So it's if you're wanting to get into the market, even though it's really hard to get finance right now, and most people have had their serviceability cut by 30%, there's still a lot of potential in the pipeline at the moment as well. Yeah,
I love it. It's seeming a bit more positive than this time last year, which is a great thing. And probably this time next year when we reflect back on this, it'll be interesting to see what does unfold. And I'm sure that excitement for 2025 is going to be even bigger.
Yeah, well, what they expect is they say projected rate cuts and constrained housing supply are poised to drive consistent growth in both house and unit prices during financial year 25. The surge is somewhat reminiscent of the housing boom of 2021, which saw house prices surge by 29%. Isn't it just funny how you read these things and then you link it to the 18-year real estate cycle, and it's it comes together.
Yeah, it totally does. And the media sentiment at the start of 2021, the clients we were speaking to were the exact same as what was coming out at the start of 2023. COVID had affected the property market. It was a scary time. We're going to go into a mini recession. All these things were happening off that sort of mid-2020 to 21 in terms of the sentiment, and the complete opposite happened in the market. And now everyone's looking back and being wow, what an exciting time. But then you look at people like Phil, who were watching it unfold, being this is exactly what we're expecting to see, but no one was really listening because they were scared. We've seen that same fear throughout the past year, but the people who have been willing to jump in the market are going to really bring home those benefits.
100%, yeah. And the good news is the RBA's tightening cycle, the RBA's rate tightening cycle is in sight. So, some people are saying we'll see another 25 basis point increase. Some people are saying that we're at the peak because it's working, inflationary numbers are coming down. which is a good thing. Unemployment rate is slowly starting to go up. Listing activity is increasing in Sydney, Melbourne, Canberra, Hobart. So, those things are good. And something that hasn't been this strong since, say, 2016 maybe, is the fact that foreign investment since the beginning of the pandemic is also driving price growth. So around 10% of Australian purchases are done by international investors at the moment.
Wow.
So that's going to keep pushing things. Now, in some bad news, as you said, it appears the rental crisis shows no signs of abating in the coming years. Annual rent growth will be 5.6% over the next 2 years, which is 2.5% higher than the long-term average. Rent inflation is likely to be higher than the 10-year pre-pandemic average growth rate by 0.61 percentage points each quarter for the next 2 years. So as you said before, no reprieve from the rental side of things. We just don't have enough available stock on the market at the moment. And it's like, because it's really challenging for people and developers to get finance, and there's no new projects coming to the market, and because we had such a big issue with the construction industry from 2020 through to 2023, it's like so many people are hesitant to build brand new. So it's just a perfect storm for property prices and rents to continue to rise with everything that's happening at the moment. And that's, as we've said a bunch of times, it's perfectly in alignment with the 18-year real estate cycle. So that's all based on like a national level. Obviously, there's going to be winners and losers in that.
Yeah, exactly.
So the markets that are expected to do quite well moving forward is Brisbane, Adelaide, Perth, potentially Sydney as well. And some of the more major regional markets in Queensland and Western Australia as well. Now that we're seeing a huge uptick in the natural resources sector, mining, things like that, we'll start to see Queensland and WA pull ahead from the rest of the crowd, which happened in this stage of the last cycle as well. So if you look at property values from like 2004 through to 2010, Brisbane and Perth were the clear front runners, and we're coming into a similar stage of the cycle at the moment. But I'm super excited to just grab my yin yang coffee cup and then pass it over to you and let you start going through the the Christopher's Housing Boom Bust Report for 2024. Let's dive in.
Yes, obviously Lewis Christopher from SQM puts out his boom bust report every year. And Simon touched on like the scenarios from last year, how they unfolded and what ended up coming to fruition. So last year he had 4 scenarios based on depending where interest rates ended up, where unemployment ended up and population growth, that sort of thing. This year he's pretty much just got 2 major scenarios of what he expects to unfold into 2024, with a little bit of an add-on to each scenario depending. So I'll get stuck in. Obviously, there's a few pages here, a lot of data, so we'll just get straight into it.
Lock in, let's go. Just to remember as well, this guy was the most accurate over the last 2 years as well.
Yep.
So, if we're going to take anything, I feel as though this is the one that's most important.
So based off Lewis Christopher's predictions, in scenario 1, which is his best case scenario, these sorts of figures are expected through 2024 if the cash rate ranges between 4.1 and 5%, so the cash rate doesn't increase above 5%. Population growth slows to about 460,000 people or less, and unemployment rises to between 4.5 and 5.5%. So these figures for each capital city are based off that sort of scenario, and this is really what the RBA wants. They want unemployment to go up a little bit to keep inflation under control, and the cash rate hopefully is going to stay at that sort of level. So Perth is really the front runner in this scenario at somewhere between 5 to 9% price increase through 2024. Brisbane, we're looking at the next top performer being 4 to 8%. Darwin, somewhere between -3% and 1% growth. Melbourne, again, between -3 to 1%. Sydney, somewhere between -4 and 0%, so not looking too promising there. Adelaide, somewhere between 0 to 3% growth. Hobart, unfortunately, at about -7 to -3%, and Canberra -8 to -4%. So the national averages for this base case forecast is for dwelling prices to change somewhere between -1% to 3%. And obviously the cities of Perth and Brisbane are expected that record rise.
And the funny thing is there as well is like we said in last month's property market updates, like the markets that are struggling the most, the markets that have got the most listings on the market, the most distressed listings they've seen, outside of Sydney, they've seen the lowest capital growth this year, expected to see the lowest capital growth next year, or none. They've all kicked ass over the last decade.
Yeah, exactly.
Like if you look at property prices from sort of 2012 to 2022 in Sydney, Melbourne, Hobart, Canberra, they've all doubled.
Exactly.
So it's no wonder, right? Like property markets run in cycles and, you know, they're unfortunately according to Lewis Christopher, the declining phase of their cycle at the moment.
And this is in alignment with what Phil says as well in his 18.6-year cycle. We know the front runners in the first half of a cycle are your Sydneys, your Melbournes, your Canberras, your Hobarts, and your front runners in the second half, driven by those mining booms and things like that, is usually Perth and Brisbane. So it really is unfolding the way that Phil is expecting it to unfold. But Lewis Christopher has got predictions for each capital city that pretty well fall in alignment to that overall cycle.
Tell you what though, I do feel sorry for Darwin.
I know.
I haven't seen anything positive come out of Darwin for so long, eh? But I hope that changes.
Yeah, definitely.
What's the second scenario?
Scenario 2 doesn't look nearly as good, but this is somewhere where there's an energy crisis. The cash rate rises above 5%, unemployment rises above 6%, inflation reignites back towards 7% following Middle East oil embargo, and population growth slows back to 460,000 or less. So in this scenario, Perth is still the front runner with somewhere between 5 to 9% price increases. Brisbane slows to about 1 to 4% in this scenario. Darwin still -4 to 0%, Melbourne -7 to -3%, Sydney -6 to -2%, Adelaide -3 to 1%, Hobart -9 to -5%, and Canberra -10 to -6%. So this puts the national averages somewhere between -3 and 0%. So obviously not as exciting of a scenario, but a few things need to happen for that particular one to unfold. And when we look back at 2023, it was scenario 1 that ended up being what pretty well unfolded. So fingers crossed in this case, it's the same.
Yeah, and the good thing is you can get this for free as well. I know we're not putting this information up on the video. If you want, just subscribe to SQM Research, or just to go onto their website, look at their news and research. You can buy the Boom Bust report like we do, and it goes into more detail than you would imagine. And it's pretty affordable considering how much value you get out of it. Or you can get the scenario table for free off their news and research as well. So go check it out for yourself to familiarise yourself with the different scenarios, but there's still a couple more to go.
Yeah, so scenario 3 is basically scenario 1, but expecting a population growth over 500,000 people. So it's the same in terms of the cash rate remaining somewhere between 4.1 and 5%, same with the unemployment between 4.5 to 5.5%, but with the stronger population growth, and this is going to help ignite the property market. So scenario 3, Perth is sitting somewhere between 5 to 9% growth, Brisbane between 7 to 11% growth, Darwin -3 to 1%, Melbourne 0 to 3%, Sydney -1 to 3%, Adelaide 2% to 7%.
I like scenario 3.
Yeah, I know. Hobart is -3 to 2%, and Canberra -5% to -1%. So the capital city averages in scenario 3 are actually the strongest at +1% to 5% growth average nationally.
What's the last scenario?
So scenario 4 is scenario 2 plus the 500,000.
Strong immigration?
The 500,000 people plus population growth. So scenario 2 was the worst of these 4 scenarios, but it looks a little bit better if the population increases by over 500,000 people instead of under 500,000 people.
Isn't expected. It's not expected, but hey, let's see what it looks like.
So that's 5 to 9% again for Perth. Pretty much Perth is 5 to 9% in all of these scenarios. Brisbane is 3 to 7%, Darwin -2 to plus 2%, Melbourne -5 to -1%, Sydney -4 to 0%, Adelaide somewhere between -2 and plus 2%, Hobart -8 to -4, and Canberra -9 to -5%. So the national averages across the capital cities in this scenario is -2 to plus 2%.
Sure. Okay, cool. Thanks for breaking all of that down. As I said, go and look at it for yourself and dive into it if you're interested. But to summarise really quickly, Brisbane, Perth, Adelaide look really good at the moment and should continue to be the front runners over the next few years. So depending on where you would prefer to invest in, just go out there and do some of your own research to compare those markets and figure it out. But looking at those numbers, very, very comparable between Brisbane and Perth.
Yep.
And then, after that, Adelaide looking pretty good as well. So what else does Lewis Christopher have to say in this boom bust report? I know, there's a bunch of other information which sort of breaks down his why he believes this sort of stuff could happen.
Just another thing he mentions is the distressed listings are likely to be up in 2024. So due to the rise in interest rates over the last 18 months, he is expecting that'll start to affect people more so in about 6 months from now. So this time last year, it was about 2.6% of the listings on the market were distressed listings. We did our market update for November at the start of this month and they were up at around 5%. So he is expecting that to increase a little bit further into 2024.
And that's at a national level as
That's
well.
at a national level, yeah.
So if you look at it more locally, then you see that like distressed listings are still down in Perth, still down in Brisbane, still down in Adelaide. So it's mostly driven by the biggest markets in Australia, Sydney and Melbourne.
So going back to those scenarios, the forecasts released by Lewis Christopher are based on two key contingencies. So I'm literally going to read exactly what he said here. The first of that is the rate of net short-term and longer-term migration is expected to peak next year and then ease so that total population growth for 2024 falls back to around that 460,000 people. Number two, the rate of inflation is expected to continue to ease back to between 3 to 4% by the end of 2024. The scenarios have been represented where migration rates do not slow next year, so that's why we've got those 4 scenarios where it does sit around that 460,000, or if it exceeds 500,000, that's the main thing that's going to affect percentage of growth across each capital city the most.
Cool.
If Australia's migration rates fail to slow as anticipated, this would likely mean SQM's base forecasts of a mild correction would not materialise. On the other hand, housing price falls could be more acute if inflation were to accelerate to the point of forcing the Reserve Bank to lift the cash rate beyond 5%. To go on from that, basically Lewis Christopher has said that another year of anticipated strong population expansion, a little bit slower than 2023, plus an ongoing shortage of new dwellings will limit the fall in housing prices to single percentage digits, and the price falls should just be limited to mainly Sydney, Melbourne, Canberra and Hobart. With expected slowing employment growth and the corresponding rise in unemployment tipped to be towards 5% by the end of 2024, this negative will more than offset another year of strong migration. These are the key assumptions behind our base case scenario. This is what Lewis Christopher's saying. If he's wrong and the housing market has another strong year, it will be because employment growth has continued to be firm, and or migration has once again grown more quickly than expected, and homeowners once again have managed to withstand the higher lending rate environment. Perth and Brisbane are still very likely to record price rises based on super tight rental conditions, a better than expected global commodities market, and minimal exposure to the financial services sector, where we believe there may be significant job losses. So a lot of what Lewis Christopher is saying is really in alignment with the cycle.
Yeah, because to go back to what Crystal was saying earlier about the cycle where Sydney, Melbourne perform really well in the beginning of the cycle, Brisbane, Perth in the second half of the cycle, what they also indicate is the tech industry, the financial services industry do extremely well in the beginning of the cycle. They're the fastest to recover, but then your commodities, your natural resources do extremely well in the second half of the cycle. So they link together because you look at, financial services and the tech industry, it's very strong in Sydney and Melbourne, where it's not so strong in Brisbane and Perth, well, not strong at all in Perth, but it's starting to become more of a thing in Brisbane now because more affordable commercial space and work from home capacity. These big businesses are obviously opening up offices in Brisbane now because it's much more affordable to do that than in Sydney or Melbourne. So, completely understandable that is the case. That is what is expected to happen moving forward. At the end of the day, this is no new news to us. It's sort of what we expected, but we're really grateful to be able to bring you this type of information and, share with you some of the resources that we follow. And I think 2023 was a really good example of the difference between the narrative and the data. The narrative at the beginning of 2023 or the end of 2022 was so negative. And to be honest, it's still relatively negative at the moment. But lo and behold, property values still went up, stock market still went up, crypto market went up, bond market went up, gold market went up, commodities market went up. So you really need to make sure that you're subscribing to the right resources and getting your information from the right people that are non-biased and are just giving you the information like SQM, like CoreLogic, like property share market economics. So if you're not subscribed to those people and you're a passionate property investor or you just care about the economy, then subscribe to those people so you can keep your finger on the pulse to see what's actually happening. And then if you've been one of those folks that's sitting on the sidelines because you have been a little bit worried about the economy, based on these expectations, 2024, 2025 are expected to be extremely strong growth years here in Australia. And Brisbane and Perth are likely to be the front runners moving forward. So if you're not too sure about what you should do, where you're at, or what makes sense for you moving forward, then I'd love to offer you a free strategy session. We run a small buyers agency up here in Queensland where we help a really small number of investors enter into the Queensland property market. You can head over to our website, www.pumpedonproperty.com. The link is below, and follow the free strategy session links to lock in a call with myself, my sister, or our brother Ben. During these sessions, we'll talk about where you're at right now financially, where you want to be in the future, what's been holding you back from getting into the market, and we'll talk about some ideas, some locations, some options that could be of value to you. Now, these sessions are just reserved for those who are expecting to purchase a property within the next 3 to 6 months. They're extremely in demand at the moment. We only have the capacity to offer about 15 of these per week, and they book out 2 to 3 weeks in advance. So if you're really thinking of getting into the property market next year and you want to start planning for that today, then go over and book in that session. We'd love the opportunity to get to know you and to bounce some ideas off one another. I know one of the major challenges that a lot of our clients face is just not having that community of like-minded people to talk about this stuff that you're interested in. So go ahead and book in one of those sessions if you want to have a bit of a chat about the market and plan for the future if you are intending to purchase an investment property. But either way, guys, we just want the absolute best for you. We don't want you to miss out on this opportunity if you've missed out on the last few years. So thank you so much for tuning in. And if you've made it all the way through to here, thank you so much for sticking through, guys. Please give this video a thumbs up. Please subscribe to our YouTube channel and share this video with somebody that you feel as though needs to hear it.
Woo! That's a wrap.
That's a wrap.
Getting
Have a
cool,
spin.
bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that.
So nice, eh?